Morning, guys. It's Max. How's everybody doing? I appreciate y'all for being here. Let's see what's going on in the Altiverse today. Let's just talking about Alti in Discord, in Rod's Discord. I love Alti, but it's not universally loved. Anyway, that's fine. Teach his own. All right, so here is the famous pie chart that I can't get working out yesterday. Here's Alti's positions as of the close of business yesterday. You have 10% in government, 10% of bonds right there, and 3% in cash. And then the rest of it's invested in these companies, usually in the company and some type of collar strategy on top of it, which would be shares from the company, short stock usually above the market, and then a long put underneath the market. That's how you construct a collar. Well, let's look at the actual. Here's the companies in there and the position they have on today. It's the same as yesterday. AMD has a collar. DJT has a collar. They all have collars. The one that didn't have a collar is still an outlier, NVO, and it still has on its covered collar spread. Trying to think if that's what I'm going to call it, or a call spread collar. Call spread collar is fine too. All right, but yeah, they still have on their call spread collar. So what that means is, let's just look at that real quick. On NVO, which is Novo Nordisk or something, some big pharma company. I think they're involved in the fat business with Eli Lilly. They have shares, 75,000 shares. It says dollars. That's not dollars. That's shares. And then in addition to that, they sold 750. So they committed to sell all of their shares. Each contract's worth 100. So 100 times 750, 700 is all the stock. That's the way that works. So they committed to sell all their shares at 86 for a strike, or 86, because that's the strike price they sold. At the same time, they've turned around and bought calls at 90, just in case it shoots through and goes past 90, they're back along for the ride. But at the same time, if the market turns around and goes the other way, they don't lose any money under 84. Now, let me look at something here. I thought they had the 75 put on yesterday. They've rolled the put up higher, which is good. But let's look at the option trade itself. Okay, my Fubo YOLO's looking good. Anyway, we don't have to talk about that now. All right, here is the NVO position. Yeah, sure enough, they've rolled their put strike up. Yesterday they had the 75 strike put, so we need to make an adjustment in here. So Novo, they have 75,000 shares, 86, 90, and 84. Okay, let me see what expiration date is. It's all for the 11th. $86, 90, and 85. That's kind of a weird position. You aren't going to have a whole lot of risk in that position. Well, I'm not. So the way I do the Altiverse is there's two things they give you in Alti. They give you the nightly positions, and that's what these things are right here. Then they also give you the trades. I didn't see an NVO trade in there last night. And the night before, I didn't study the trades. So they've adjusted their position. I don't always catch it because I just look at the position like I did today. The position is long stock, short 86 call, long 90 call, and then long 84 put. I just didn't catch that yesterday. Anyway, it's still a caller, but I don't catch when they move the strikes around. But here's the thing for you guys to look at. The closer the strike is to the current price, he's moved the put strike. He's moved the put strike to 84, and the current price is 83. That's why I'm having a hard time simulating it. I don't even know. I would have had to have the exact trades. I just don't want to follow the trades. I just don't think that all these things make money hand over fist when the market's going up. I don't think following the trade. I'm trying to get a realistic profit loss graph, so what he might be looking at, but without having the trades in here, I'm kind of just guessing. But that's what I was picturing. It's something like this. He's not going to have a lot of risk on the downside because he can only can lose. He's cut off any losses under 84. I had 80. Anyway, that's the position right there. It's just like anything else, rooting for higher prices. If prices go higher by the end of the week, they stand to make more. But it looks like if prices go lower, they don't stand to lose anymore. I love this. I just wish I had been following it each step of the way so we could have seen exactly what he did. I'm sorry about that. Well, anyway, that's what he has on now. He has on that this trade. I think I forgot to hit save, of course, so it's not going to be. Yeah, I did. Of course. Well, I didn't know what it was anyway, so there's no use in saving it. All right. Well, what else do we have to look at? I guess let's go over here. Look at the index buffer report. Or I guess we haven't even looked at the Altiverse yet. All right, here's the Altiverse. Alti's down 2.44, or the average stock's down 2.44. Luckily, because Alti's in the option selling business, they're only down about half as much. Good job, Alti. Of course, all the stocks are down today except Micron. Micron, I guess, got good news out of the NVIDIA press conference last night. I guess NVIDIA said they're using Micron as a supplier, so Micron's one of the few stocks that's up today. Or that's what I heard on Discord. Good information. Look at HIMS. Wow, that's interesting. HIMS is up. So we have Elf Beauty. We have HIMS, Micron, and what is that, Celsius Holdings or something? Now I have to look because I said, what is it? I got the Celsius right. Last earnings were November 6th. I don't guess they have. New one hasn't been announced yet. Here's a 1-year chart of it. 12 days ago, spotlight on Celsius Holdings, analyzing the surge in option activity. Well, that's why Jay's in it. Jay likes option activity. Option activity creates high volatility, and so he's trying to monetize that. All right. Family portfolio down about $4,000, a little bit more. I was about caught up yesterday. I was about caught up, and now the market had to pull back again. I dug myself out of a hole. But I pretty much invested right at the high. Look at this. Check this out. That green arrow is pointing to the bar that I bought. Of course, I wasn't trying to time the market. We aren't supposed to time the market, but you know, the SPY was right around 600 when I got the family in. Now it's around 590. SPY's off, you know, 1% or something. Unfortunately, my portfolio is off 3 or 4%, but it's because I use in more volatility than the SPY. I have more volatile stocks, so it's going to be down more when the market's down and up more when the market's up. But all right, so buffer report, I guess, or index buffer report. Everything's down except Y triple Q. Y triple Q is up a point. I like that in about a 20% allocation to against other Q stuff. So if you had 20% of that today, it'd be up a point. Now you only catch 20% of that, you know, but if you have 20% of that in your portfolio with QDTE, for instance, it'd be a pretty strong portfolio. This would be up a point, which would give you the effect of being up 20 bips. So let's see how much QDTE is down. QDTE is down. It doesn't matter which one you have. You could use this to offset any of them. You could even use this just against the regular Qs, or you could use this against the triple Qs. You can do all kinds of things now that they have this out. But anyway, let's see what our net effect would be. Let's pretend like this would be good for Alti also. You could have Alti in this at the same time. It doesn't matter. Anything that has exposure to the stock market. So Alti's down more than a point today. We'll call it 1.2 exactly. Okay, so Alti's down 1.2. So if you did the 80-20, Alti wouldn't be down. They'd only be down 80% of 1.2. So 80% of 1.2 is 1. But then they would also get credit for whatever this one is up. This one is up 20 bips. So 1 minus 20 bips would be 80 bips. So you would only be down 80 cents today, 80 bips, instead of being down 1.2 bips if you used a 20% allocation of the inverse fund. Not to mention the inverse fund pays you dividends also, so you don't give up. You shouldn't give up that much yield if any. But that's kind of how it works. It would take a position that's down 1.2 to down 80 bips. That's a pretty big difference. That's, you know, you could lower your volatility. It doesn't make it where you can't lose money or anything, but it can certainly help. I'll have some content coming on that soon. Here's a back test. Check this out. Here's what would happen if somebody had Tesla crash, Nvidia dips, Coney fiat, and XDTE and or QDTE and Y triple Q. Okay, so wonder if somebody had 80% of the high yield stocks and then a 20% allocation of the corresponding inverse stocks. You know, Tesla has an inverse stock called Crash. So in the Tesla allocation, it's 21% Tesla, 4% Crash. But if that was its own allocation, that would be approximately 80-20. It'd really be like 82, close. Close. So then same thing with Nvidia. And I did them all in the same portion and made a portfolio that overall is 80 long, 20 short. And look how well it did. This is only based on 4 months. This is September. This is a third of a year. It was up 15% in a third of the year. It beat its benchmark, which was the Qs, badly. Now, here's what would happen if you did a portfolio with just the yield stocks and no protection. So no crash, no dips, no fiat, just the high yield stocks. How much would you be up? And you'd be up twice as much. Okay. But you also have twice as high a standard deviation. Your drawdown was more. You had a lot more volatility. and portfolio 3. I'm going to do a full report on this, so we'll talk about it sometime. But this shows you how it works. Somebody that just has the yield funds is up 30% on the year. But you could do this and you're still up 15% on the year, which is still beating the benchmark, but you have way less standard deviation and way less drawdown. Not to mention, what are we doing this for? We're doing it for income. And in a third of the year, the one that's hedged with the funds, the 80-20, and then the inverse funds, made was that $273 in a third of a year. That's $750,000 a year income on $1 million portfolio. Now, granted, you could have made more up here, but I would still take this portfolio. I would still take portfolio 1 over portfolio 2. Anyway, more content coming on portfolios that are hedged. 80-20 is pretty interesting stuff. I found out a lot more interesting stuff on it. All right. Sorry to get off on this tangent. Like I said, I don't even want to do these. I may just quit doing the morning report. No one watches them anyway, and that's fine. I mean, I don't care. I get like 100 views. I mean, my channel's basically dead. I'm not doing it for the money. Luckily, I've been blessed, and I don't need to do it for the money, which is awesome. Thanks. Shout out to the people that have come before me that have planned well in their lives. So now I'm trying to do the same thing for the people that are coming after me, but they made it pretty easy on me. So single stock buffer report. GDXY up. You'd expect that because it's a gold miner. Pretty much anything tech's going to be down, but some of your counter trend assets, gold and oil, commodities, might be up a little bit today. That's pretty good to see. Gold and oil up, everything else down. All right, so what else can we talk about? I talked with Altigrid. I talked with Jay yesterday, or I emailed him and told him congratulations on his new gig. They had a merger, I guess. Tidal and Zega merged, or Tidal bought Zega or whatever. But Jay is now, Tidal's a lot bigger company than Zega ever was. Jay is now I think, chief trading officer of Tidal. I think that's what he is. Anyway, it's good. They're going to consolidate their action. Here's what I think. I think that Jay, and it's just an idea. I think Jay and his business partner, Derek Moore, they do the broken pie chart. And I don't know, I think Jay has another partner too, but Jay and whoever Jay talks to, I think they had outgrown their operation. I think they're going to just, from a back office point of view and stuff, I think they'll pick up some economies of scale, letting all of Tidal's office do all the back office, all the accounting and stuff, and just let Jay focus on trading and really talking to influencers. That's really Jay's true talent. I think he's better at talking to influencers than he is at a trader. That's the trading. I mean, he's, the trading's whatever, but what makes any stock or any company go is the marketing department. The marketing department's everything. And Jay, that's what Jay does. Jay's marketing. That's what he does when he comes on my show and when he comes on these other shows. He's really good at it. That I think that's his talent. All right, guys. Well, let's see what else we have to talk about. I want to talk about Jay. I wouldn't mind starting to do this update, maybe live in Discord. I just don't know how to do it, but get in that room where we can talk, and then you guys could get in there and talk back to me, and it can be more, I'd love a back and forth conversation. I want to start doing that. So I'm hoping to do that. Like I say, and I may just start I don't even like doing the update. I may just start doing the update, maybe live in Discord just for you guys, because no one watches it anyway. That would take a lot of pressure off me. I'll just come in there and hit live. We'll go in the live room. Maybe I can record it and put on the internet too. But anyway, if you guys would be interested in that, I'm trying to make the Max fam and the Discord something for you guys. And I'm trying to make it where I can consolidate all this stuff I have, the buffer report, all these spreadsheets, and put them. I want to put them in one spreadsheet in one place and make like a dashboard. that'll have, like it'd have like a pie chart here and a bar chart here, and then some other stuff here, and and some numbers here or something. I'm trying to make all this stuff more accessible, where it's accessible in one place. So that's my goal. But also for Discord, I want it to be something that helps you guys out. It's going to be a place for you guys also. So you tell me what rooms we need, what we need to have in Discord or whatever. I'm not trying to do it because I don't have enough subscribers or whatever. I have tons of subscribers. This was not I'm not trying to SEO my site better or anything. But at the same time, I think I could do a better job. I'm not doing a good job sometimes explaining how these work. And I haven't been lately. I think I did a good job the first 6 months, but lately I have not done a good job presenting the ins and outs of these. So I'm trying to look for more avenues and different ways to do that. So anyway, if you guys have any ideas on that, let me know. I've told you before about I'm getting some help on the spreadsheets, but that person's gone until Friday. But hopefully when they get back in town, they'll help me build the dashboard. And I may not even do the updates some mornings. If I had a good dashboard with all the stats in it, you guys could just go look at it. And then I could concentrate on something I like. I want to, I like to write videos, longer form videos where I talk about the theory of options or something. In fact, I have a great video right now that's called The Theory of Options, where I explain how and why options work and what they're designed for and what they weren't designed for. And I think that's really good. Anyway, all right, I'm going to go get to work on that. I hope you guys enjoyed this update, and I will talk to you later.